Investing in stocks can be tricky, except if you invested into tech stocks in our current bull market. You didn't need to study the business. You didn't need to address whether the valuations were appropriate. All you needed to do was buy as many shares as you could afford. That's all it takes to succeed in a bull market. Until something changes. You came here for the truth, so let me unveil that for you. Today, we're going to look at fairy tales. Let's begin. Euphoria everywhere you looked. This is the 2017 price returns, showing you different areas here, whether it's oil and gold, 12 and 13%, the S&P, 19%, all world stocks index, 21%, going up to the Dow, NASDAQ, and beyond, doing well. And then we look at FANG stocks, 46% in 1 year. That is quite significant. Obviously, you do not see that normally in any other sector. It's not normal for tech stocks to far surpass everything else year after year after year. You could have particular companies, but it seems like there is such a major concentration that's occurring that we haven't seen since the tech boom and bust. And yes, of course, this time is different. Heard that one before. Well, you'll see for yourself here the different markets, different places around the world, and their performance. What is never addressed by those who have invested is central bank intervention. Why isn't anybody talking about the fact that these FANG stocks are the primary purchased stocks of central banks? Don't you think that that could be playing a role? And it's not the fundamentals. It's not the fact that everybody has an iPhone in their pocket today and they didn't have that in 1999. Does it play a role? Absolutely. But is it the primary factor? No, it's not. Central bank intervention is what's causing the distortions in the market. When you look around at different markets, there could be many companies out there that would seem to be more valuable than a company like Netflix, for example. That's the extreme example. When then you see the Netflix stock, it starts to go almost parabolic. And then you look at some other big names that have good revenue, their sales are doing well and everything else, and you'll see their stock moving up, but in a more realistic rise. And then you look at the PE ratios, you look at all of the fundamentals, you look at the sector itself, you look at the research and development this company is doing, their advancements, their technologies that they are implementing that are better than their competitors. You just look around. Maybe the company's been around for 50 years. You got a big track record. Things are very different. I'll say that much. But not in the way that other people like to talk about it. There's always euphoria that takes place in any bull market. And for the majority of people, they simply can't wrap their head around it. In this case here, central banks are the primary cause of what you're seeing today. Take a look at this. Vanguard Total Stock Market Index Fund. I just picked a random one of the biggest in the world, in fact. Total net assets is about $194 billion. Okay, it's a massive fund. If we take a look at where this started, okay, if I try to put my mouse around here, today it's sitting at 66. If I try to put my mouse here, I can see if I can. It won't allow me here. But approximately, we'll say maybe 58 or so. Right. Looking back. And you have to take it that, that's the 1 year. There we go. If I go back to the bottom, March 2009, it's at 19. Okay, let's just say it's tripled in price, a little more than tripled in price. This is one of the biggest funds in the world, and it's tripled in price since 2009. If I look at the FANG stocks, it's increased right here. If I go back, 46% in 1 year. This completely dominates any of these funds. If I set up my own fund, I call it FANG, I bought those stocks, I would have done way better. I didn't need to have a fund manager. I didn't need to pay all of these MER fees, management fees that they have. Why would I? And that's what people are doing. It's something to look at. The average person, they don't know what they're doing generally, whether it's investing in stocks or anything else. So they get into these different funds. They say they're diversified and everything else. But all of these funds decline the same amount as all the stocks. So people are buying individual stocks versus funds. I totally get it. You see, though, a change that's occurring between people investing in mutual funds, hedge funds, and things like this, and they're going to passive investing. So they're going into ETF index funds because the index has done so well. If I go back yet again, I mean, if I go to the S&P 500, 19%. That's great. If you couldn't get a fund to get anywhere near that, that's an excellent return. So we can see what's happened, completely distorting the markets thanks to the Federal Reserve. Valuations elevated no matter the metric. This is the S&P forward price to earnings ratio. And you'll see we've hit a top that we definitely surpassed during the financial crisis time frame and heading towards that direction from the dot-com boom and bust. Paying more for slower growth. I thought this was an amazing chart and I wanted to show you. If you take a look at this from here down, you'll see the GDP numbers that as time goes on, people have to get used to having less and less. These are the different bull markets, looking at it, coming back from the 40s into today. And if I'm just looking at this for the past 50 years, you'll see for yourself. Slower growth, and that's becoming the norm. That's not a good sign. I'm telling you right now, although they make it seem like they can always get more growth, don't worry. It's being squeezed. It's squeezed. And think about interest rates during this time frame. You look at from 1980, in this case here, and you just see it going down and down, and they hit the bottom. Well, you're not going to be able to get anywhere to get any more growth if this is what you've done. Good luck. What's every peak typically followed by? Well, there's always that sentiment. I'm rich, I'm rich, I'm rich, I'm doing well. And then the market tanks. We are far, far beyond the average. And look at this. Household net worth share of personal disposable income. This happens all the time. People feel that sense of I'm rich, I'm wealthy, I have money, I can spend it. And unfortunately, they get beaten up every time. This happens to be just taking a look at what people are doing, how the mistakes that they continue to make. They never learn their lessons. They always get burned. The GSCI and the S&P 500 ratio Equities expensive, commodities cheap. Take a look at this. So you can see that in this time frame right now, it looks like perhaps commodities seeming to be very cheap. As far as I'm concerned, equities very expensive. And you know what happened where commodities shot up in price 2008? It's just, I'll say it's interesting, to say the least, to compare these two together. And then last but not least, I just wanted to finish with this. This is a list of the historical US tariffs since 1983. You can see the description on the left, the date they were announced, the effect on the markets over the 30 days after, forward 30-day returns, and then which administration had done this. All right, so it's pretty interesting. You know, they're making a big deal about all this in the news today, but look at even Obama, what he had done during this time frame. There were quite a few. And of course, on China, he raised the tariff for Chinese steel imports, imposes 266% duty on some Chinese steel imports. So they're making a big deal about it in the news, but it's not new. This has been going on for quite a while. And look, even back during Bush, 29% tariff on Canadian softwood lumber. So I just wanted to make note of that, because we've seen tariffs before. A lot of countries impose tariffs. So we shouldn't necessarily be afraid of tariffs. We shouldn't listen to what the mainstream media likes to say about it, because they're going on today, they were going on yesterday, and they're going on all around the world. You might disagree with the tariffs. I just think it's a little cunning by what the media does and tries to take things out of context, because they know the average person doesn't know, and they prey on that. So I hope that you are aware of this already. If not, when people start talking about it, you have some information that you can mention. I think it's important to know the truth, whatever it is. As long as you know the truth, then you'll have what you need. And you can make your own decisions. I feel that oftentimes I get criticized, and I'm sure you do too, in your circles. But ultimately, all I'm trying to do is bring out the information, and then you decide what you want to do with it. If you want to listen to these videos because you dislike them, I think that's a weird thing to do. There's quite a few actually that do that. I think it's kind of weird. But if you like to watch these videos because you want the information contained within them, you'll notice, if you've been here for a while, all I try to do is basically be informative. And you take what you can from them. Sometimes there's more information than others. Sometimes you just get a couple nuggets of good info. But I just want to bring it out there. You decide what you want to do with it. If you want to use it for your own investing, maybe you're a prepper, maybe you're, into precious metals or real estate or investing, or you just want to know some news. Well, that's what I'm here to do. So I hope you appreciate that very much. If you do, please give me a thumbs up. And I know a lot of people are feeling the same issues with their family, friends, coworkers. They try to tell them a little bit of truth, and unfortunately, it doesn't really work out. Well, trust me, I hear it every day. If you found the video informative, please give me a thumbs up. And last but not least, if you found this video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you need to do is go over to Amazon. There's links in the description below. It'll allow you to flip through these books, see if you like them. Take care.